Hi, welcome back to Oak Business Consultant. Today we are back with a new financial model that is for the tea room businesses. In order to review this model, we are going to go through these different sheets. But before we start reviewing this model, you have to know that these peach cells are representing the assumption cells and the gray cells are representing the formula or the linked cells. Starting off with the assumptions sheet or the input sheet, here we have included all the necessary assumptions related to this business. This includes your investment assumption, financing plus loan. Then we have expenditure assumptions, that is capital expenditure plus operating expenditure and payroll. And then we have cost and revenue assumptions. You can see that these are the pieces where you have to make changes. Making changes in these cells will result in changes in the rest of the model. These are the gray cells, so you don't have to make changes in them because they have formulas or linking. You just have to make changes in these P cells and the rest of the model will change automatically. Next is the revenue analysis sheet. Here we have included a customer projections schedule and then the revenue being generated from each of the products and the cost of goods sold. You have to note that this is a 60-month projection model, which means the total number of years in this model is 5. This is a supporting details sheet where we have included all the major expenses of the business. This includes your variable plus fixed operating expenses, your loan principal and interest payments, then we have depreciation for each asset, and then we have the working capital calculations where we have accounts receivable, accounts payable, and closing inventory calculations. Next is your startup summary. Here we have compared the funding expenses of the first year of operations of the business, and we have also included graphs for easy analysis. Next is monthly profit and loss. Here we have calculated the monthly net profit for each month, and then we have also included margins such as gross profit margin, net profit margin, EBIT margin, etc. Then we have the yearly profit and loss statement where we just have accumulated the profits of the last year and calculated the yearly figures for each year. Then we have the cash flow statement, both annual and monthly. This shows the cash position of the business and it separates the cash from financing, investing, and operating activities. Then we have the balance sheet. Balance sheet shows the financial position of the business, and again we have included an annual balance sheet and a monthly one. Project evaluation calculates the NPV IRR of the business and the payback period as well. Next is breakeven analysis. This calculates the breakeven point or the breakeven sales point, which means the no profit, no loss situation for a business. This is the diagnostic sheet, which calculates the major ratios of the business, such as we have here cost profit margin for each year and operating expenses as a percentage of sales, which means operating expenses margin for each year. Last is the dashboard. Here we have included graphs to represent all the financials we have calculated in the previous sheets. We have also included a scorecard that highlights the major financials of the business. You can see here. And that's it from today. Thank you so much for your time.